Hi, I'm Salik Zahoor. I have been in Dubai for over 13 years, and long before I sold my first property as a broker, I was on construction sites, building villas, managing new builds, and executing renovations. And that's where my journey in real estate truly began. I'm proud to say that I'm one of the few engineers in Dubai real estate who became a licensed real estate broker by choice. In my entire career, I have met only 3 other engineers who are brokers, and that's what makes me different. It's the combination of engineering logic and investment understanding that defines everything I do. Over the years, I have worked with investment bankers, CEOs, family offices, and ultra-high net worth individuals, helping them to acquire land, develop bespoke villas, and unlock value through renovations and resale. But I also offer full scope real estate consultation. At Uplift Properties, we don't just broker deals, we engineer outcomes, and every recommendation is backed by real data, construction insight, and market research. From off-plan advisory and portfolio structuring to design, development, and resale, our goal is to help you make smarter, safer, and more profitable decisions. Welcome to Uplift Properties, where engineering meets real estate. 36 million dirhams invested and 70.8 million dirhams returned. That is not a lucky trade. That is not a once in a decade opportunity. That is what happened when you understand the 4 specific ways where Dubai real estate actually generates wealth and you pick the right one for your capital. Most people who come to Dubai thinking about property, they only know one of the 4, and today I'm going to walk you through all of them so you basically understand that how you can make money in Dubai real estate. I'm not a sales agent who reads market reports, but I'm someone who has personally made money and lost time on every type of deal I'm about to describe in this video. So when I tell you how to make money actually in this market, it's coming from real experience, not from theory. Let me break this down. There are 4 distinct strategies, and each one has a different capital requirement, a different timeline requirement, and a different risk appetite. Most people, they confuse them or try to mix them up. This is actually where money gets lost. The first method is one you hear about all the time. You buy an apartment or a villa from a developer before it's built, and this is called off-plan. You pay in installments over the construction period, typically 2 to 4 years, in some cases 5 years. And if the project is in the right location, by the time handover comes, the market price is significantly higher than what you paid. And in some cases, the investors are selling their contracts before they even take their keys. This is called Uqud or SPA or sale purchase agreement. The profit comes purely from the price appreciation, and have seen investors, they can make between 20 to 30 or 40% this way on projects in areas like Creek Harbor, JVC, Business Bay. But there is one thing important. Not every off-plan project performs. Location, developer, reputation, and launch pricing, they all matter enormously. Buy the wrong project at an inflated launch price and you're sitting on a loss at handover. The market does not guarantee appreciation just because something is off plan. The second method is rental income. Dubai consistently produces a gross rental yield between 6 to 8% in the right areas, sometimes even higher for short-term furnished apartments. If we compare that to London or New York, where you have typically 3 to 5% gross before taxes, that Dubai does not have. There is no income tax here, there is no capital gain tax here, so you keep what your property earns. The key word there is gross versus net. You still have service charge, management fee, and occasional vacancy. And in a well-managed property, your net yield is typically between 5 to 7%. And this is still significantly better than other major global cities around the world. This method works best for investors who want steady income, not a quick flip, and it requires patience, a good tenant, and a property management you trust. The neighborhood producing the strong yield right now are in JVC, Silicon Oasis, and certain pockets of Dubai Marina, JBR, and also those areas which are close to the mass infrastructure. Method 3 is my personal specialty. You find an undervalued property, once that has been in the market too long or has dated finishes, lack a pool, or has an awkward layout that a skilled renovation can solve. So you buy it, you renovate it strategically, focusing on upgrades that buyers actually pay a premium for: kitchen, master bathroom, outdoor space, and finishes, and then you sell it to a premium buyer. The profit comes from two things simultaneously: the natural market appreciation while you hold it, plus the value you physically created through renovation. I call it a double uplift. The key is knowing which renovations add value and which one just cost money. Adding a pool in a right community, it can add 1.5 to 2 times its cost to the sale price. Redoing a kitchen in the villa that sells to European buyers will recover every dirham you spend, but over renovating for areas, putting 5-star finishes in a community where buyers expect 3-star, that can kill your margin. This strategy works best in areas where there is scarce supply, small defined communities, and where there is only 60, 100, 150 or 200 villas. And remember, when a beautifully renovated villa comes to the market, there is absolutely no competition because we target mature communities with liquidity depth. The fourth method is where the large returns are and also the largest capital requirement. You buy a plot of land in a premium freehold area in Dubai, you design and build a villa, you sell it to an end user buyer, and your profit is the gap between the total cost, land, construction, design, approval, financing, and your final selling price. This method requires you to understand construction from inside, how to read drawings, how to manage contractors, how to navigate approvals, and how to control cost during a construction. It is not a passive strategy. Done wrong, it is the most expensive way to lose money in Dubai, and done right, it is the most powerful wealth creation vehicle available to a private investor in Dubai. I've personally completed 13 plus projects that include renovation and new build. And at the start, the example that I quote of Dubai Hills Estate, where the investor invested 36 million and sold for 70.8 million, that's 96% ROI over 3 years. And this is one of the examples out of many examples in Dubai real estate where you can buy land, add value, and then can sell it. And the best part is the reason this model works very well is because of its scarcity and being bespoke, and also being Dubai attracting the ultra high net worth demographics who don't want cookie cutter developer layouts. They want something specific, something bespoke. Let me give you a specific example of method 3 in action so you can see exactly how it works in practice. In Dubai Hills Estate, we identified a villa that was on the market and it was not moving. It was priced at 6.6 million, good location, good community, and also very scarce supply. What I mean by that is that there were only 60 villas of that type in the community. And the good part was the villa has no pool, the kitchen was dated, there was no landscape, and we could have bought extra GFA to increase the built up area and add more value and practicality and enhance the living experience in that property. Our client, of course, we did all the work, but the client invested 1 million dirham in the renovation, a pool, extended outdoor terrace, complete kitchen replacement, master bathroom, additional bathroom, and high quality finishes throughout. Total investment was 7.6 million and we sold it for 9.8 million dirham. Profit was around 2.2 million, which is 22% ROI in 13 months. Now here is the part most people miss. That community, as I stated earlier, had only 60 villas of that type. When our one came into the market fully renovated and priced correctly, there was nothing else to compare it to at the same level. Supply scarcity is not an accident. We choose that community specifically because a lack of supply meant our premium would be protected, and that is how the money is made. I have done a comparison study between an off-plan purchase from a developer and a new build in the same community, same asset class, which if you want, you can click on the link and I can send it to you, and it will blow your mind that what are the difference in returns when it comes to buying directly from the developer and creating value. So if you have capital and you're serious about investing in Dubai, whether you're looking for your first transaction or you already own property here and want to understand how to get better return, reach out to me directly and I'll be more than happy to help you.